This is the daily fiscal pulse for the 21st of April, 2026. Just a heads up that we're looking back at what happened through Tuesday's close, not running live. Let's establish what's really driving market sentiment today. The narrative right now is fairly unclear, but Tesla's earnings beat on profitability despite missing revenue targets, with margins expanding in their auto business, has clearly caught traders' attention and influenced how prices are moving. The question is whether that's just noise or the beginning of something bigger. Let's check what the actual cash flows are telling us. The headline number is a net fiscal transfer of $21.3 billion for the day. That's not alarming on the surface, but what's happening underneath is more significant. The 5-day flow picture has deteriorated to roughly half the pace we've grown accustomed to. The real mover here is tax receipts, which came in at $33.9 billion. The S&P futures closed at 7,100, which keeps us above the 20-day moving average sitting at 6,785. That 20-day band encompasses about 826 points of trading room. So despite the fiscal headlines building, price action is still holding its ground. When you zoom out, the picture becomes clearer. Government spending on a 5-day basis is averaging $54.0 billion daily. Stack that against the 20-day average of $11.5 billion and you're looking at a pretty stark pullback. What this means in practical terms is less cash flowing through the economy, fewer dollars circulating through households and eventually landing in risk assets. Conditions in the financial system are becoming more restrictive. Year over year tells a similar story. Spending through this fiscal year sits at $701.8 billion, representing a 16% decline compared to where we were 12 months ago. That's a substantial reduction in the amount of fiscal juice in the system, and liquidity constraints like this do matter. For anyone carrying long exposure, it's important to acknowledge the fiscal environment isn't exactly working in your favor. Our conditions gauge is sitting at -64. But here's the other side of that coin. We've observed comparable setups repeatedly throughout history, and even with tighter liquidity, the S&P has averaged positive 1.1% performance over the following month. Cash flows and stock prices don't always move in lockstep. Equities frequently find ways to push higher regardless. The practical reality is this. Because fiscal flows are tracking well below prior year levels, that shock absorber in the system has thinned considerably. When headlines are positive, markets can still climb higher. However, when risk surfaces, whether it's related to the unclear narrative we're following or something else entirely, selling pressure can accelerate much more quickly due to that thinner liquidity cushion underneath. There are a couple of calendar events worth monitoring. Tomorrow, the 22nd of April, marks the SSA payment cycle on the 4th Wednesday, which historically shifts near-term flow patterns. Earlier this month, the 15th of April represented the individual income tax deadline, which ranks as the single largest reserve drain event the government faces annually. The data clearly demonstrates fiscal drag is present. What's encouraging is that the pace of tightening might be stabilizing. Where things go next really hinges on how these programmed flows settle out. That's your edge to watch.